Hi, this is Ashish Shanker, Head Investments at Motilal Oswal Wealth Management. I'm happy to take you through the key highlights of the August version of our monthly publication Alpha Strategist. We've titled this edition Wall of Worry. The reason is that we are seeing increasing tension on trade between US and China, and I believe this noise will increase going forward. In India, we'll have a slightly turbulent phase in markets with state elections happening November, December, followed by the general elections. We saw the RBI hiking rates in the last policy. We believe that they front-ended a lot of the rate hikes because they do not want inflation to exceed their band of 4 plus minus 2. Our view is that there will possibly be one more hike if they believe inflation is continuing to be on the rise. Their worry is more core inflation, which is closer to 5.5–6%. But I think this rate hike cycle will be short-lived, and one more hike will be the last of the rate hikes. It's an exciting time for fixed income investors because you're getting very good absolute fixed income yields closer to 8.5% for AAA. Single A papers are yielding closer to 9%. So you can build a nice fixed income portfolio through mutual funds, accrual funds, or even FMPs, which can yield you closer to 8.5%, which is what we recommend at this point in time. As far as equities is concerned, July was a good month for markets. Sensex was up 6%. The mid and small cap indices were up close to 3.5% each. It's been a busy season as a lot of companies have declared earnings. In the Nifty, about 60% of the companies have already declared results. The trend we are observing is that the sales and volume growth for all the companies is very good, which means the demand in the economy is strong and getting better. The companies which have declared results so far have seen a 22% growth in sales and 14% growth in bottom line. There are cost pressures led by input costs going up because of commodities being higher and fuel costs being higher. However, we believe that the demand cycle will continue to grow stronger as a broad set of industries will start participating in the earnings growth. On a broader line, we believe India is at an inflection point because our economy is roughly close to $2.5 trillion, and in the next 6 to 8 years, if nominal GDP growth is close to 12, we will hit $5 trillion. Now, this is a very important phase for any economy, and it happens once in the lifetime for all economies. And you see massive growth in market caps, and a lot of new industries get created and become very big. This is exactly what will happen in India as well. We are seeing the birth of many new industries getting listed, like asset management companies, insurance companies, healthcare companies. In fact, it's an exciting journey. So I believe investors should focus on the longer term and not worry about the volatility in the shorter term. So if you're not yet adequately invested in equities, I would urge all investors to increase allocation and get invested. We've launched an exciting product with one of the finest asset managers in the country, ASK. It's called the ASK India 2025 Fund. And this fund is basically aimed to pick companies which are going to participate in this journey from a $2.5 to $5 trillion. And we're going to buy companies which we believe will become pretty big in market caps over the next 6 to 7 years. So we recommend this product, and I think it will create a lot of wealth for our investors. So over the next few months, markets will climb this wall of worry internationally as well as domestically and be higher over the course of the next few months and years. So we believe that you should look at your longer term objectives, keep faith and stay invested. Thank you very much for listening. You can give us feedback on our email ID, follow us on Twitter, or listen to our YouTube channel. Thank you.